All righty, folks. Time to kind of catch you up on what I'm doing in my business and what I'm seeing going on out there. We got the one and only Mr. Stephen Dow. How you doing, sir?
I'm fine. Yourself?
I'm doing well. Do that marketing thing real quick because I got a fun topic for you.
Yes. Again, although I work very happily for Velocity Mortgage Capital, all the ideas and topics discussed on this channel, that of my own. So let's get a good conversation going again.
Yeah. So one of the things that people will go back and look on my channel is I'm definitely starting to shop in luxury products. Again, I've never owned luxury product for rentals. They've never made sense. The market is definitely softening up. We're seeing days on market get longer and longer. So what I'm doing now is not only just trying to learn the market, which is what I always do. Now I'm going the next step with a tool called PropStream to figure out what people's mortgage balances may or may not be, right? Are they own free and clear and things of that nature? The reason I want to do this is I want to see who might be open to, frankly, 90% seller financing because I want to bring
Right.
10% to show I'm game. But
Right.
also, if they can't do 90% because maybe they have a small loan on it, who could
Hmm.
do the 50-40-10, right? And
Right.
again, Velocity Mortgage, near as I can tell, the only provider out there that has these 90% CLTV loans. And if you
Hmm.
know how to get creative and use interest rates, you really can get a blended interest rate, a first and a second, in the fives, if not lower. So, is that still working? What are you seeing in the luxury market? Because I'm reading some articles about Velocity, really
Hmm.
providing a unique solution there.
Yes. Again, for the higher loan amount luxury properties, they're typically not going to debt service. Once you fall out of conventional financing, a lot of those types of borrowers are finding it difficult to get, alternative financing with these bank statement programs or debt service or DSCR programs, things of that nature. So they're looking to us to kind of, bail them out of some of those situations because they've been given the runaround. Oh yeah, we could do it. They submit the filing, get an appraisal done. They can't do it because they want debt service. And then they try to go to another lender, transfer that appraisal over. Another 30, 60
Yeah.
days go by. That doesn't work. And then, yeah, usually right at the end, hey, we need your help.
Get it done.
Yeah, I got this note maturing, so on and so forth. So they usually come to us, kind of as their last ditch effort. But again, we're going to be able to make it to the finish line because there's no tax return, pay stub W-2, and in most cases, we're super aggressive with the debt service ratio. So in reality, it's not really of a major concern on residential 4 units and under. And loan amounts typically are supposed to be up to 2 million, but we've made exceptions to that rule. There's one in the system right now for about 3.1 million. So we got some flexibility in that kind of area with compensating factors. I believe that loan, they're not trying to do, maximum LTV, things of that nature,
Yeah.
strong borrower. But outside of that, it's a pretty good alternative, especially the fact that with our loan, it is a 30-year fixed loan, and it normally comes with a 5-year prepay. But I've been discussing the strategy of buying on the prepay to just a 1-year prepay, so
Right.
that in the event where a lot of the experts are saying things could get better in about a year, you now have an out. But if they
Yeah.
don't, you still have 29 more years of a fixed rate to protect yourself. So kind of the best of both worlds
Yeah.
in that capacity.
Again, I've been doing this a long time. I think one of the things that's pretty obvious in this banking crisis is regional banks are going to be less apt to lend. I mean, across the board. And if you guys
Right.
don't know what was going on in the regional banks, they were giving sweetheart loans
Oh yeah.
to the rich and wealthy. And now the rich and wealthy may have short-term debts or some other financial needs, and the regional banks are, for all intents and purposes, closed to new loans. I've heard about many kind of investors that would usually count on First Republic because again they're like right up
Hmm.
the road from where I'm at, and they're
Right.
not doing loans. At least the few folks that I've heard from, and it makes sense that Velocity is seeing an uptick because there is
Yep.
a need, right? You're some wine purveyor in Napa and you got a
Right.
$5 million property and you have some need for capital for operational grapes or planting or whatever the hell it is.
Hmm.
They can't go to First Republic or other institution, other regional bank. There's
Hmm.
hundreds of them. That's why
Right.
Velocity, I think, phone's ringing off the hook because you can be a provider there.
Oh, for sure. We kind of are positioned uniquely in the market because again, I say this jokingly, but it's kind of true. When all else fails, come talk to Uncle Steve because 9 times out of 10, we've got some sort of solution for you, just given the specific property type and certain circumstances. But um, we're also more of a make sense lender, so we're not as rigid as some of these more institutional lenders are. With compensating factors and things of that nature, we can kind of overlook certain deficiencies, whereas with on the conventional side you're either cookie cutter or you're not, because it's like
Yeah.
running it through an automated machine.
Yeah.
You know, a
And that
robot's like,
conventional side's getting like
approve,
this.
decline. Yeah, exactly, exactly. So, somebody just reached out to me today who used to have a really strong relationship with a local bank, and they were looking for additional financing on a new project, but they said that they were going to turn them down unless they would close a line of credit that they had with them as well. So they're just tightening up, all the way around. And so,
Yeah.
yeah, I'm slowly seeing that where people used to be able to get financing from other sources are now drying up and now looking to us.
Yeah, and again, I always like to shop where there's not a lot of competition. Today, at least in my market, below the median, it's on fire like I haven't seen.
Yep.
So being able to shop in the luxury market, again, I will only deal deals that cash flow day one. It will have to be a monster deal to cash flow to put that kind of risk. But knowing that I
Hmm.
have the ability to do a 90% CLTV, get the seller to take back 40% at below market rates, have you come in for a first. These are things that I just like having in my tool bag. So if somebody wanted to call and talk about 50, 40, 10, whether it be luxury or not, how
Hmm.
should they do that?
Again, just email me to sdao@velocitymortgage.com. In the subject line, please put the acronym ORAAT for one rental at a time. The body of the email, just maybe a brief description, what you're looking for. Property address would be great just to make sure we lend there. And then, of course, your mid FICO score would be helpful. And the best number to reach you at in 24, 48 hours, I'll typically be in touch.
Yep. Folks, at the end of the day, the lending market, I always talk about a housing market and a lending market. Lending market is changing very, very quickly. There are operators who say one thing but can't deliver. Please
Right.
protect yourself. Get a second, get a third relationship
Plan
so that
B. Plan B.
Plan B.
Yep.
Stephen, thank you for all you do. Thank you for coming back every week. We appreciate you.
Likewise, man. Have a good weekend.
Yep.